Good day traders, it is Stefanos on behalf of Tixee, and in today's webinar we'll be giving a look back of the market for the week of the 12th until the 16th of September. Now looking at some of the highlights for the course of the past week, FedEx was on track for its biggest one-day decline after missing its earnings estimates. Meanwhile, on the Forex front, the US dollar continued its advance over the prospect of a 100 basis points interest rate hike next week. Before we get into all of that, the disclaimer first. As always, please know that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, as we mentioned during the intro, let's have a look at FedEx first. I'm going to pull up the chart in front of you on Tixee's web trader in the meantime. I'll set it on the daily time frame, and just by looking at the chart, I'm pretty sure you can pretty much gauge the impact of the drop after both the EPS estimates as well as the revenue estimates were missed. Now the EPS estimate was actually missed by a surprise of 33%, which is quite staggering, while the revenue estimate was missed by 1.72%, and the rest is pretty much history. As you can see by the chart, on Thursday we're still closing above $200, and with the open on Friday, the stock opened all the way down to 156 and dropped as low as in the 155s. Before it actually recovered ever so slightly, but still it reached a low of 24% on the day and just recovered just about 3%, and it's looking like it's set to close at about minus 21% on the day. Now this also shows the impact of the timing of the release of the earnings. Of course, we're kind of past the Q2 earnings season. Most of the major corporations have reported the figures. Of course, we still have the odd ones out, such as Adobe and FedEx, who reported their earnings as well. Now looking at FedEx, they reported them on the 15th after the market close, which, as we've kept mentioning during the earnings season when it was still in play, if you have a company reporting the figures after the market close, you'll be seeing the impact most likely on the very next day with the open, which was the case with FedEx as well. Again, one of the biggest declines in its history in a single day. So yeah, I would say it would be a stock to keep on watch in the short term, because we'll be discussing about it in the outlook as well, should you wish to stay tuned for that one as well. Now moving on to Forex and looking at the US dollar, it finished with yet another strong week. I'm just going to pull up the chart on TradingView real quick and leave it on the weekly time frame, remove some of the indicators, and you can pretty much see the candlestick. It was up by close to 1% of the week. It did retrace a little bit, but still posting a pretty strong week and staying within highs from the past 2 decades. If I zoom out, you'll see that these highs they weren't reached all the way back until this area, which is pretty much back in 2002. Now the reason for the ongoing strength for the US dollar could also be due to the fact that we have the prospect of seeing an up to 100 basis point hike during the interest rate meeting from the US next week. 100 basis point is equal to 1%. Now the most likely scenario, looking at percentage terms, is going to be a 75 basis point hike. The chances are of us seeing a 75%, 0.75 basis point hike, and then it's 25% to see a 100 basis point hike. So the potential of 100 is still there, but obviously not as likely as seeing a 75 basis point one. Nevertheless, it's one of the reasons that potentially we saw the US dollar keep on strengthening over the course of the week, and definitely it would be the currency to watch for next week as well, amongst some other of the majors as well. Now The case for an even more aggressive rate hike cycle could also correlate with the fact that inflation in August didn't show any further signs of slowing down. Remember, over the course of this past week, we had the inflation figure being reported from the US, or also known as the CPI figure, and it showed an increase from 8.1% to 8.3%. So this could be the narrative as to why the Fed would like to keep on with it at its aggressive rate hike cycle. Other than the dollar index, obviously since it strengthened, we saw most of the majors moving lower. So if we look at the pound dollar, for example, this one, it reached a 37-year low. As you can see, it's trading in the 114s, which were not levels seen since, if we zoom out all the way back here more or less. So it's not just the only one. I mean, obviously we know the case with the euro dollar, that it's dropped below the 1.0 mark. As you can see, it did rise slightly above it, but it's still pretty much almost one. If we just look at the 2 decimal points here, it's 1.00. So yeah, overall it's going to be an interesting week, not just for the dollar, but because we're also going to be having some other interest rate decisions, which again, it will be good to stay tuned for the outlook, as we'll be discussing about those as well. And lastly, looking at some of the commodities such as oil and gold, as one would expect, with the continued strength in the US dollar, the commodities that are pegged against the dollar would move lower, and that was the case with both oil and gold. Now, oil didn't drop as much as gold. It dropped only by 1%, or 90 cents over the course of the past week. It was looking like it was gonna end in the green, but then obviously things reversed and is now closing down in the red. Things were somewhat worse for gold, since the inverse relationship with the dollar is a little more pronounced, I would say. You can also see it from the weekly candlestick itself. Gold prices fell by more than 2.4%, or $41 over the course of the week. And yeah, this pretty much sums up all of the action for this past week, and the look back and review as well. I hope you enjoyed the video and you found it useful. Like we said, stay tuned for the outlook as well. I'll be discussing about some interesting things for next week as well. And yeah, I'll catch you in the next one. Until then, trade safe.